Hello everyone and welcome to today's video. We all know that markets have been really volatile in the past couple of weeks, and I just wanted to explain one of the trades that I took during this time frame, so that this can serve as an example as to what kind of trades you can take. So we look at a trade on ATKR, which is ATKR, and I basically got a decent return on this trade. But as we'll see, you can see how the trade was structured, and you'll realize that with the markets going down, the stock was already trading at a pretty good discount. But then, as I've said in my numerous other videos, that you need to create more and more cushion, as much as cushion as possible, to make sure that you're on the right side of things and the trade ends up as a profitable trade. So we'll get into all those details, and this will be a quick video to understand how I structured the trade, what was the thought process behind it, and then finally how it turned out. That's what we're going to discuss today. We'll take a look at basically the details of the trade. A quick look at the disclaimer that whatever information I'm sharing with you is only for entertainment purposes. This is not any kind of trading or investment advice. If you plan to trade or invest your money, please get in touch with a certified financial advisor. So first of all, I want to show you the price movement that was happening for this particular stock during the time period that the trade was open. And this particular chart actually shows a bit wider time frame. So it starts here on 18th Jan 2022. That is when the trade was open, but it extends till today, although I closed the trade earlier. But the important thing that I want to highlight are two things over here. The first thing is that the lowest price that the stock went to during this time frame was $91 and couple of cents. So you can see here this line shows 91.48, and the stock never went below 91.48. So we can safely assume that the lowest price was above $91.5 during the time the trade was actually open. The second thing that I want to highlight is, which we'll understand as we understand how the trade was structured, is that this particular trade involves selling put options, and I'm selling puts below this price. So when I got into the trade, the stock was trading at about $104, $105, and essentially in this trade, I had sold the 90 puts. So what that does is it forces me to buy shares of Adcore if the price goes below $90, and if the price stays above $90, then I just keep the premium. And if you look at the high during this time frame, it's about $120, and this is also kind of the yearly high, the last 52-week high for this stock. So the high is at 120 and my puts were at 90. So you can see that there is a lot of gap, and I had a lot of cushion there, that the stock would actually have to fall by $30 from its highs in order for my puts to be assigned. So let's proceed further. So this is the actual screenshot of the trade from the trading platform to show what was done. As I mentioned, on basically 18th January, I had sold the $90 puts and I collected $220 of premium for that. And then on 10th February, that is about 24 days later, I basically bought back the same put option for a price of $20. So the difference here being $200, which is the net premium that I actually gained from this trade. So here are the trade details. I've already discussed a lot of these details in the previous slides, but again, this is all details capped in one place. And you can see here that the trade was opened on 18th Jan. It was closed on 10th February. So the total holding period of the trade was about 24 days. And the net premium that I collected, which is the difference between the premium that I collected when I sold the option and then the premium that I paid to buy back the option, was about $200. So if we annualize this return, you can see that the net return on an annualized basis was 33.76%. And for the 24-day holding period, the actual return was 2.22%. Now, this is not a very high yield, it's not a very high rate of return, but understand that this trade was taken in very, very volatile markets, which were turning bearish. And so the prime importance should be given to basically taking a safe trade rather than looking for high yields. Because if you look at this, that's what I highlighted earlier as well. The stock had a recent high of $120, close to $120, and the puts would have been assigned to me only if the price of this particular stock dropped below $90, and my cost basis in case I had to buy the shares would have been 90 minus the $220 of premium, so it would have been $87.80. So that's the kind of cushion that I wanted to give myself to make sure that I don't end up actually taking a loss on this particular trade. And that is very, very important when markets are volatile. You have to be aggressive in the sense that when the markets are bearish, you need to identify opportunities to take these trades, but at the same time, you have to take trades which give you enough cushion so that in case you're wrong, you don't take a heavy loss there. This is the daily chart of ATKR. This is what I was trying to highlight, that recently you can see the stock has been making highs of 120, close to $120, and my buy price would have been around 90, around 87 and a half dollars, which basically is a very firm support as well. So that was the basic understanding that I had, that even if I have to buy shares for 87 and a half dollars, that price level is a very strong support, which probably the stock will hold, and that gave me enough cushion, enough premium, and also the level was a support. So in case the price were to fall uh, down to the 87-90 levels, there was a very good chance that the price level would have held and the stock would not have fallen further. Maybe some of you have noticed, but these details which I mentioned here, these are actually a screenshot from the community tab on the channel. So I am posting the trades that I'm taking, not all of them, but some of the trades that I'm taking on the community channel. And so you can basically watch those trades there. uh, it takes some time to create a video explaining the entire basis of the trade and how I basically initiated the trade and how it ended. So it takes time to churn out the video and publish it, but it's much faster for me to update the details and share with my viewers and subscribers on the community tab. So if you're not already doing so, please keep a check on the community tab and definitely subscribe to the channel, because if you're subscribed, then anything that I update on the community tab, you'll get a notification for that. So I'm updating my trades there, and if you want, you can watch my trades, and if you like the trades, you can do your own investigation, do your own research, and if you feel, you can take the trades for yourself as well. And I don't do day trading, so most of the times, even if you're looking at these trades a couple of hours, a couple of days later, you will still find that you can get the same kind of premium or even more premium in some cases that I collected when I took the trade. So that should be helpful. As usual, if you have any comments or suggestions, please leave them in the comments section. Thank you for your time, and I'll catch you guys in the next video.